Just getting going. We do have a little bit of a change up today. We have Holly Wade from the NFIB. I'll get into that in a second, but Holly does have a hard stop. So a little bit before the hour is finished. So we'll let Holly get through her presentation. Let a few more people get in as far as participants. And then we will do announcements and what have you after Holly is finished with her presentation and the Q&A. So as far as bios, Holly Wade is the executive director of the NFIB, the National Federation of Independent Businesses. It is one of the largest organizations that's plugged into small businesses. They have a very robust data set that comes from NFIB on a monthly basis. And it's been going on for over 50 years on a regular basis, and irregularly before that, a little bit longer. So a really important thing that a lot of us depend on a regular basis. Again, Holly's the executive director of the NFIB research group, and she's been with NFIB for 18 years, which I've known Holly for quite some time, but not all 18 years through NABE. So in any case, without further ado, let Holly, why don't you get going and we'll go from there.
Great. Thank you so much, Mike. It's great to be with everybody. I hope it is a bit warmer in Atlanta than it is in DC, although it is a nice day here. So I think folks are out there enjoying the last day before it turns cold and you know, unpleasant out there before we all have to start hibernating again. But great to be with you. Thank you so much for the invitation and talking about small business. I'm going to go through some of our data that we've been looking at over the last few years about just the huge disruption that's happened in the small business sector and how small business owners are trying to navigate some of these headwinds, especially labor force shortages and supply chain disruptions. Those are the two big ones, as with most businesses out there, but how they're impacting small firms specifically. So I wanted to just talk a little bit about the background of these two surveys that I'll be referring to. One is the Small Business Economic Trends Survey. And as Mike said, we've been conducting this not quite for 50 years, but for 48 years. So our first survey was fourth quarter of 1973. And the charts will look at the whole history of the survey, where we are now compared to where we've been. The dashed line that you will see on the chart denotes the most current data point reading, so you can see, you know, kind of perspective of where we are looking backwards. And then we also have another survey that we've been conducting over the last year and a half. It's our small business COVID survey. The first one that we conducted was in March of 2020, when all of a sudden we started seeing supply chain disruptions and thought, well, we should probably capture what small business owners are experiencing. Little did we know that we're now just released our 20th COVID small business survey and asking a multitude of questions related to the small business federal programs, relief programs, and utilization of those programs, how important they were for small firms, how they're going through those programs as far as PPP, forgiveness, idle application, denial rates, those sort of things. And both of these surveys, just to put in context, are of random samples of NFIB's membership. So NFIB has roughly 300,000 members, and these are all random samples of our membership database that we're using for these surveys. So let's get into it. The Small Business Optimism Index is our headline measure for the health of the small business economy. It consists of 10 questions within the questionnaire. the questionnaire, we mail it to this random sample, automated generated random sample every year. So it's a unique random sample every month. And it is by paper. So this is labor intensive, but it's the best way to get the highest response rate that we can receive. So it is a mail survey. 10 questions on this mail survey are components of the index. And we're seeing the index right now, the last for October's data, we just released last week. But the index is right now about the 48-year average that we've seen historically. However, this index is very different from what we typically look to as far as the health of the small business economy. 3 of the components in this index are jobs related and also inventory related. So the index is elevated a bit, it's elevated quite a bit because of those 3 questions that are at historically high levels and are not indicative of kind of optimism or optimistic small business owners. And so if we kind of took those at more, average time or more average economy, the index would likely be about 3 to 4 points lower than it is right now. However, when we look at it for October, it is roughly around the historical average of the last 48 years. But this is, kind of what I'm talking about as far as this kind of artificially inflated level of optimism within the index, one of the components, and this certainly shows that small business owners aren't terribly optimistic about what business conditions look like for them in the next 6 months, or what they're anticipating business conditions looking for like in the next 6 months. We see historically low levels of business owners saying that things will get better. For the majority of them, they're saying that they anticipate things getting worse. And that is certainly related to their inability to staff up as much as they would like. And the major concern for more of them than even the staffing shortage is the supply chain disruptions and being able to acquire those inventories and supplies that they need to operate their business. And here's one of the other questions that is included in the index is whether it's a good time to expand in the next 3 months. And this is just a % of those saying yes. And again, as you can see with the dotted line denoting the most recent data point going back, that we're still at historically low levels, a bit elevated from the depths of the pandemic. But historically low levels are saying that it's a good time to expand, which is kind of interesting when you look at, and I have a slide on this a bit later, when you look at the number of business formations that are happening right now, we see historically strong levels of business formation. So there are folks seeing market opportunities out there to start a small business, but for those who are operating and have operated a business through the pandemic, they aren't particularly optimistic about what they see as far as expansion opportunities. And again, a lot of this has to do with they're not able to staff their current workforce to where they would like to be. So there's little opportunity or room to expand their business if they're already having these issues currently. So here's the most popular data point for the current situation that's facing small businesses: unfilled job openings, and we have exceeded every historic high that preceded the last few months. And before the pandemic, we were in a tight labor market. Small business owners were telling us frequently that this was a concern of theirs, not being able to fill open positions, and even more are saying that right now. And not only having fewer applicants apply for these positions, More are just saying nobody's applying for these positions, and they are increasing wages to be more competitive, to attract those who might otherwise apply, and they're still having a very tough time doing that. Also, job creation plans. So the net percent who are looking to increase employment in the next 3 months, still obviously elevated levels. They are trying. They're really interested in filling some of those positions, because when we look to our COVID survey, which I believe I have a chart in here that shows they are experiencing lost sales opportunities. So it is their ability to capture that increase in consumer spending that they're losing out on, not being able to fill these positions. And they're having to adjust business operations quite a bit to deal with some of these problems. And then looking at planned and actual labor compensation changes. So planned increases and actual increases, again, we've exceeded the previous historic high levels of this. So more and more small business owners are increasing compensation, not only for those open positions, but for their current staff, to make sure that they can retain talent and retain their current workforce. So they're looking to, you know, they more are have increased compensation, and even more are saying that they are planning to in the future. So this pressure, this compensation pressure of being competitive with their counterparts in attracting talent, doesn't appear to be easing anytime soon. So this is something that we will likely see at least for the next few quarters, as this pressure to increase compensation to fill those positions, but also to retain their current employees. And this is from our COVID survey that kind of supplements or fills in some of the space that we're interested in knowing more about, what type of adjustments in trying to find talent, but also what adjustments they are making within their business to compensate for these staffing shortages. So for those who are experiencing staffing shortages, you know, 63 to adjust, or their adjustments beyond normal hiring practices to attract applications, 63% are increasing wages. So that's obviously the main tool to attract applicants, increase those starting salaries for those open positions. But they're also increasing paid time off and offering enhanced hiring bonuses, offering enhanced referral bonuses, and also, interestingly, offering or enhancing their health insurance benefits. So I did want to point out, though, that the data that is on this slide, I forgot to update it from. So this is from the beginning of September. The most recent survey is from the end of October. So we just released the 20th COVID survey a few weeks ago, and just to compare the difference between 2 months of dealing with these staffing shortages. So in the most recent survey, 79% said that they're increasing starting wages. 21% increased paid time off. 16% offered or enhanced hiring bonuses. 19% offered or enhanced referral bonuses. And interestingly, 23% now say that they are offering or enhanced health insurance benefits. So over the last, it's been about 15 years that we've seen this steady decline in health insurance offer rates. It'll be interesting to see what this looks like going forward if a few more small businesses start offering health insurance, and maybe offering it sooner than they would have otherwise, to attract applicants and retain talent. When looking at what they're doing internally as far as having to adjust business operations to compensate, not surprisingly, 41% are offering more hours to part-time employees who are interested in taking on more hours. Overtime for those who are full-time employees, 60% are doing that. The main thing that is happening though, and I've talked to so many business owners, especially I have a friend who owns a restaurant, and so he's dealing with all of these headwinds. And every time I talk to him, I pepper him with questions about how he's dealing with this. And when I asked him if he had any supply chain disruptions, his response was, what's not a disruption? Everything's disrupted right now. But he is having to, along with 79% of owners reporting that they're having to work more hours in the business. Unfortunately, it's, so there's burnout on the employee side. There is definitely burnout on the owner side as well. And I've, as I said, I've heard from many small business owners who are wondering how long they can keep this up. In the adjustment for hours, 30% are saying that they've had to adjust operation hours to compensate for a lack of employees, and their inability to kind of work 24 hours to make up for that, or the owner. They're introducing new technologies enhancing productivity. So they are spending a bit more on those tools that they can use internally to help with productivity, whether that's upgrading their payment processing or more online services that they didn't have before, things like that, introducing those new technologies. And then the reduction of variety of goods and services sold. So probably many of you have seen this, especially in the restaurant industry, where menus are being scaled down and tailored because they aren't able to hire enough cooks or other staff to deal with this. So scaling down the variety of goods and services sold is also a step that 1 in 4 are taking in adjusting their business operations. So as I mentioned, the biggest challenge and the, what's unfortunate about the staffing shortages is there is increased consumer demand for a lot of these businesses, and they are losing out on sales. So 1 in 4 are saying that their staffing shortage is creating significant lost sales opportunities. Another 28% are saying moderate lost sales opportunities. And then when asking about whether they think that this situation is going to get better, worse, or about the same, about 2/3 are saying that it's about the same as it was a month ago. About 1/3 are saying that it's getting worse. And so this doesn't bode well for, from now until the end of the year, especially through the holiday season for retailers, restaurants, wholesalers. So some of these industries are going to, it's going to be a long holiday season for them to try to figure out how to operate their business, capture some of that increased consumer demand for their product or service with these significant staffing shortages. And they're not seeing that it will likely ease up anytime soon, unfortunately. So looking at the inflation front of things on Main Street, actual price increases are being absorbed by having to increase their prices. So the increase in compensation, the increase in product or services, the inventory that they have to pay for is being transferred obviously to and having to be absorbed by increasing their costs. And so we've seen that with many small firms saying that they are having to adjust prices earlier than they normally would have, whether that's a few times throughout this last year instead of just, at the beginning of the year or at the end of the year when they kind of reevaluate what prices look like. They're having to do it in more frequently than they would typically. So we see elevated levels of small business owners increasing their prices compared to the last 3 months. We haven't seen this since the high inflation and high interest rates from the late 70s early 80s. And this is also not going anywhere anytime soon. More small business owners, and this is at record level highs, numbers are saying that they're planning to increase prices to deal with some of these cost pressures that they have in the next 3 months. So over half are saying that they are anticipating having to increase prices of their product or service in the next 3 months. And then back to the COVID survey, asking a few more questions related to prices, whether they've increased their average selling price due to supply chain disruptions or staffing shortages. And over 2/3 are saying that they have increased prices, and then asking them by how much. Over 1/3 are saying that it's 10% or more that they're having to increase the price of their goods or services to absorb some of those cost pressures that they're experiencing. Moving forward though, and this was interesting, and I created this question and didn't know how it was going to turn out or what it would look like coming back, but I was surprised that 21% said that they were going to continue with accelerated price increases. I didn't ask for how long after things normalize, but it's likely to kind of to make up for some of the pricing issues that they had earlier in the pandemic, some of the sales losses that they had earlier in the pandemic, to make up for some of that. And they anticipate continuing with those accelerated price increases, at least for some time after staffing shortages and supply chain disruptions normalize. For the most part, they anticipate going back to what they did before, or back to pre-crisis adjustment practices. And then looking at planned capital outlays, we've seen an increase in those who are planning to make capital outlays. This is likely back to the question where we asked what they're doing internally, adjustments, to deal with some of the staffing shortages, and they say that they're looking to introduce new technologies to increase productivity in their business. And so this is likely where this is showing up in the plans for capital outlays, the increased number of those anticipating that. And then when we look at earnings levels for small businesses, we've seen a kind of a bit of erratic responses over the last year. Not surprisingly, it's been with the outbreaks of the Delta virus, the beginning of the pandemic, earlier this year, things were looking better, and then they kind of all fell apart. And now going into kind of the winter months, or the fourth quarter into the first quarter, I think people are kind of anticipating maybe earnings aren't looking so great. But we've seen a bit of a decline over the last few quarters of where earnings have been compared to 3 months prior, and that there has been a bit of a deterioration on this front. Right after the big COVID hit, I think that huge spike was likely due to the infusion of the Paycheck Protection Program funds that they then were able to rely on in operating their business, and give them some significant support in paying bills, paying their for payroll, things like that. So between the Paycheck Protection Program, the Economic Injury Disaster Loan Program that many have taken advantage of, that is likely the spike at the beginning. And then, as I said, it's kind of bounced around a bit as far as earnings levels, or how that's how earnings are they're reporting earnings over the last few months. And so, unfortunately, we have seen this deterioration there. It'll be interesting to see, as these headwinds, hopefully in the first quarter of 2022, second quarter of 2022, ease up. I would anticipate this improving on the earnings front. And then not surprisingly, looking at kind of the financial part or the financing part of small businesses, though the percent of regular borrowers of our membership, but our membership generally behaves as most small business owners in operating their business. We've seen a steep decline in those who are borrowing regularly, at least once every 3 months. Again, this is likely and due to their utilization of the Paycheck Protection Program, the Economic Injury Disaster Loan Program, and the Employee Retention Tax Credit Program that unfortunately has ended prematurely or ended early for Q4 not being available to them. But many have who were eligible, taking advantage especially of the PPP program that has eliminated their need to go to their normal borrowing needs for a time. We did see a bit of an increase this last month in regular borrowers, so I'm sure we will see that probably increase over the course of the next few months as those programs run out and they've kind of exhausted those PPP funds and not being able to take advantage anymore of the ERTC. All of those wonderful acronyms that hopefully one day I won't have to talk about anymore. Looking at the supply chain disruption, we have a question related to inventory satisfaction, whether their inventories, they're reporting that they are too low or too large or okay. But the net percent, the too low minus too large, we've seen a rapid increase over the last 6 months of those struggling to increase inventory supplies, saying that their stock right now is too low, or during the last 3 months. And we saw some easing on that part, but I'm not sure if that was just more normalizing, because in our COVID survey, we haven't seen much easing on that front. And they still do anticipate these supply chain disruptions continuing for some time. And this is our COVID survey. Back to our COVID survey again, whether supply chain disruptions are impacting their business. Almost half say that they're significantly impacting their business. Almost nobody is saying that they haven't experienced some sort of supply chain disruption. And then whether the supply chain disruption is better, worse, or about the same as it was 3 months ago, almost 2/3 are saying that it's worse. So it doesn't appear that things are improving on this front. Hopefully, as things get back to normal in the later or the first part of 2022, we'll see some improvement here. But right now, it is particularly difficult for small business owners with the supply chain disruptions. They have very few options available to them to deal with this. And again, with all of these issues, the unique challenge for small firms is that the owner is generally the one who's having to navigate all of these headwinds themselves, and also having to absorb a lot of the hours that they're with their staffing shortage. So they are stretched pretty thin when it comes to being able to navigate some of these that a larger firm might have available resources to help them through this. The small business owners having to deal with all of this themselves, which just adds to the stress and consternation that they're dealing with these challenges. When asking about whether supply chain disruptions are impacting lost sales opportunities, again, not quite as significant as the labor shortage, but still 19% are saying that this disruption is significantly affecting lost sales opportunities, and 30% moderate. And how long do they anticipate these disruptions impacting their business? For the majority of them, unfortunately, they're saying that they anticipate having to deal with the supply chain disruption that's impacting their business for more than 6 months. So going far into 2022, these adjustments that they're doing internally as far as dealing with these, they're there to stay for a bit longer, hopefully. Hopefully they're just overly cautious or pessimistic about this and that things will ease up before then, but they are not anticipating things getting better anytime soon. But I will leave on a more positive note. As I mentioned, the chart from the census and their business formation statistics program, which is new, that they have been looking at monthly totals of business applications and looking to see what levels there are compared to where we've been. And we've seen a huge spike in business formations. And this is the optimistic picture that certainly makes me think that folks are looking at market opportunities. We had a huge economic disruption that more people are looking to start a small business, and that's always great for the economy. So with that, I will stop and answer any questions. Thank you.
Thanks, Holly. Lots of different pieces there. We've gotten a couple of questions, and if other people have questions, please go to the Q&A box and type them in. But there seems to be some inconsistencies. That's one of the questions, and essentially that some parts of the survey sound like things are real strong, and that sort of thing. But also, it sounds like whether it's the capital expenditures part of the survey, among other things, they don't match up with that pessimistic overall outlook view. So how do you kind of square that, Holly?
So good question. I think so the capital spending increase, I think, is just their attempt to try to deal with these headwinds that they're experiencing, especially on the labor shortage front. So they're spending a bit more money than they likely would have otherwise, having to introduce new technologies to compensate for that. So a lot of the typical measures that we would normally say are optimistic looking aren't that optimistic, because of these supply chain disruptions, staffing shortages that they're having to deal with, where it's distorting the picture quite a bit. And then, as I mentioned with the earnings, that didn't look terrible compared to, say, the Great Recession or anything. But again, it was likely elevated or supported by those federal programs that were hugely important to the survival of many small business owners to continue through these challenges. So it is interesting. A lot of the data that we have, it turns into kind of a different story now in COVID land versus a normal kind of recession or recovery.
Yeah, also perfect. A great question that one of our regular viewers asking about is just what's the definition of small business as far as NFIB is concerned in the survey. I know it's members of the NFIB, but kind of how do you guys categorize that?
Sure, great question. I should have mentioned this at the beginning to put it in context. So the majority of our members, about 85% of our members, are employer businesses. And of those employer businesses, the average size is about 5 to 10 employees. So we're looking at and surveying pretty small businesses out there, and they span most industries, but the most concentrated industries are residential construction, retail, services, and manufacturing.
Great, perfect. That's great color on that. How big is the sample size generally? I know it moves, but
it does. So the COVID surveys, our sample size is roughly about 600 respondents. On the small business economic trends surveys, oddly, because just historical consistency, on the first month of the quarter, we have a larger sample size. And then the interim months is a smaller sample size to match up with when we just produce the survey quarterly, but around the same. So about 600, 600, I believe, for the interim, and about 900 for 800, 900 for the larger quarterly.
Cool. So another question, there's a lot about the reducing SKUs, which we're also hearing on the medium and large businesses are also doing the same thing. Obviously that flows through to profitability. It also has an impact on productivity, and you touched on productivity a little bit. How much do you think that interplay of we're not doing the things that they were nice to have things, but they're not as profitable, obviously, we've cut those down. How much do you think are permanent shifts, or are they just, hey, we're in this environment, we don't have enough labor, more temporary? What do you think? What's the view on that?
Sure. So I think in talking to small business owners, we haven't surveyed that particular question to see what might continue going forward versus temporary. But in talking to small business owners, it does appear that a lot of their changes might be permanent. So the limited menus for at least some time going forward after things normalize, I think they're going to experience that it's just easier to manage their business. And they, if they continue to have, strong consumer spending in their business, they might stick with those adjustments. So I think a lot of these adjustments will continue going forward, unless it becomes competitive where some folks are starting to, revert back to what operations look like before in their industry. But for instance, hotel operators, the local hotel operators, if it's not servicing, folks or cleaning folks' rooms every day going forward, they might just continue to say, if you need, a new towel or something, come back to the front desk. That might actually stick for, the foreseeable future past kind of the COVID disruptions. So I do think that a lot of these adjustments will become more permanent.
Yeah, well, and I was struck by that statistic of the 10%, greater than 10% increase by a third of the respondents of
Yes.
how much they're increasing prices, which dovetails into another question of why do small businesses believe that they have more pricing power? Is it perhaps just that there's been strong demand, or do you think that there's other factors at play there?
I think, they have to be competitive. So there is that balance that they have to remain competitive, and all businesses are absorbing higher costs when it comes to compensation and inventory and supplies in running their business. So for a restaurant, it's higher compensation and higher food prices that they're having to deal with, and those have to get absorbed somehow. And for the most part, they're passing those costs on to the consumer. And right now, it doesn't appear that it's impacting kind of consumer spending at their business. They're still saying that they are experiencing significant lost sales opportunity. So while there's that competitive part that they're still having to manage and adjust and kind of figure out how this all looks in the next 6-12 months, they're having to adjust just like, everybody else in their industry. So I don't know that it's specific to small businesses. Everybody's doing it. We're all paying more for the same thing. But for them, it is this stress of, how far they can, push off some of these costs and still remain competitive when some of these headwinds start easing up. And if they ease up more quickly for larger businesses than smaller businesses, then how does that look as far as them being competitive kind of at the tail end of this? Right. It's going to be a challenge.
Absolutely. Which kind of dovetails a little bit into ordering and those that are goods related.
Absolutely.
What does the survey tell you? What are folks saying about this concept that we're also hearing a bit about of over ordering, sort of padding orders to try to manage inventory a little bit better because of the supply chain issues? is anything within the survey addressing that?
We don't, but that is a very good question for our next survey. So I will make notes to see what they're doing about that. My kind of gut is that they are not likely doing that because they don't want to be saddled with excess inventory that they don't know what to do with. They are not, for the most part, it's kind of slim margins when it comes to small business owners. And so they're very conservative when it comes to, spending in ways that they don't know that they're going to be able to make up for.
All right. One last one.
Sure.
I know you got a hard stop here.
No
one
problem.
last one. It's kind of two questions I'll marry up that are both about the new business applications, which has expanded dramatically.
It has.
To what extent do you think that's making up for some of these other businesses where people were let go and they decided to open up their own business or their own service, and how much do you think that is contributing to this labor supply shortage problem that's ongoing?
Yes. So I think that, most folks, when they start a small business, they're using their savings, and we have a lot of savings out there. And so those who are laid off maybe don't want to go back to the job that they had before, and are, kind of navigating their options and starting a small business with the experience that they had from their previous employment is kind of the cycle of how small businesses are formed. And we've had, an experience where kind of all of those pieces have fit together, where, it's not surprising that we've seen this elevated level of business formations. So I think a lot of it is that. I think, it could be that for those who closed up their previous business, have started up another business, and so, with a different EIN number and all that, we're seeing, kind of elevated levels of business formation that we wouldn't have been there otherwise. But because of this huge savings rate, I think there are a lot of folks that are thinking, I have a great idea, I see the market opportunity, I'm gonna try my luck and see what happens, and they have some money to do it.
On top of the support programs, STIMI and enhanced and expanded unemployment benefits, obviously those all play into that as well.
Yes.
If you're cutting it close and you don't think you could start a business, but now you have a couple of grand that you weren't expecting, and that's the capital.
And your friends have a couple dollars, and your parents have a couple dollars, and your siblings, and you gather all that money up, you have an opportunity.
Yeah. Although it's many of and Dunk has talked about this for years, that most small businesses have self-finance, which you mentioned earlier. So that whole same idea of your friends, your relatives, your neighbors, everybody pitches in.
Absolutely.
When somebody's starting a business. So
yes.
Nonetheless, I know we're up against it. Really, really appreciate your time, Holly. A lot of great insights. And of course, all this is going to be posted on the YouTube channel. Really appreciate it.
Great.
Thank you.
Thank you so much. It was wonderful to be here.
Absolutely. All right.